Hey guys, B Twice here. Today is Saturday, October 9th. I hope everybody is having a good weekend. Today we're going to be taking a look at a general market overview. We're going to be looking at SPY. To start it off, we're going to look at the weekly to see what we've seen and where we could be going. So we were at all-time highs and we flushed off of it and we came down to this area right here that I have in pink. We came down, we kissed the 30-week moving average. This yellow line's a 30-week moving average, and we were right by this AVWAP from this last pivot. This was a wave 2 pivot coming up here. So this area I have outlined between 423 and 415 is a demand zone. We got right around it, but we didn't get into it. And then obviously we bounced off of it. So we kind of closed. We had not a horrible close on Friday, but not what we'd like to see. Obviously, we bounced high off the lows of the week, but at the same time, the candlesticks were kind of ugly. With that all being said, this market could still go to all-time highs, or it could potentially come lower. What I would be watching for if we do potentially head lower is that we want to catch support in between 423 to 415. If this 415 range breaks, more than likely the next spot that we're going to catch support is where I have this white dotted line right here and this circle drawn. And this is another AVWAP pivot, which is right around the 396 400 range. So that's something to keep an eye on. The one thing that I was watching for on the weekly chart is this RSI trend line. I thought that we would come down and touch it when we find bottom, and we haven't seen that yet. So I'm not really liking that because it could mean that we're still going to see another flush here over this next week or so going into OPEX, taking us down to the low. So a couple things to be mindful of is that yes, the bottom could be in. We did catch our support off that 30-week moving average. We did catch support in this demand zone and bounce off of it, but ultimately we really don't know exactly where this is going to go just yet. So that's a look at the weekly. It doesn't really tell us a whole lot except that we were able to defend, the bulls were able to defend the 30-week moving average. So now let's move on to the daily. Okay, so looking at the daily chart, we're looking at the yellow line right here is the 8 EMA. We got the 21 EMA, and then we have the 50-day moving average. We're not going to talk about the wave count just yet on here. It'll be on a different video, but let's talk about just of everything that we saw. So going into this week, we were flushing down. We came down and we found this bottom. Could it be the complete bottom? Sure. Could it have just been a short-term bottom? That time will tell. But let's look at what we're seeing here. So if you look at the percent R and the RSI on the dailies, what you saw is you could see divergence on both of them. So you started seeing bullish divergence back here. So look below, you can look here and see it right here. So you see that bullish divergence. So there was already signs going into last week telling us to buy the dip based upon this divergence. That doesn't mean that the bottom's in when you see that bullish divergence. It just means that we're likely going to get a pretty significant pop to the upside, which is what we saw throughout the week. Obviously, we gapped up and then had a very, very ugly candlestick on this gap up. Obviously, we had a couple green days. From there, we gapped up, and then obviously we closed. The reason this is a bearish candlestick right here is we actually closed at the low, close to the low of the day, but right there on the 21 EMA. So not a great day, but better than obviously gapping down. And then on Friday, a pretty ugly day in itself. It kind of looks bearish to me. So I would think that at the very least next week, what we're going to see is a reversal to fill this gap up. And then from there, we're either going to be going to all-time highs or we're going to come down and that's where we're going to find our actual wave 4 bottom. So we're kind of in this middle ground right now where, it could go bearish, it could go bullish, but because we're still underneath the 50-day moving average and we haven't had a bullish cross on the EMAs, that still tells us that the bears are in control. Obviously, looking at these candlesticks, you know that. So right now, the ball is in the bears' court, and I think we'll find out very quickly this week which way it's going to go. So that's it for this video. Just a little bit of technical analysis, just kind of looking at this stuff. We're going to go into the wave count on this very next video. So make sure you check that out. All right, guys.